Peter, let's start at a very top level. We've seen some tremendous price action let's start with equities for the time being as a place to start. What do you think is playing out here? Because the market is trying to grapple with, is this a shorter term thing or is this potentially a larger thing? I've made my opinion quite clear that I think it's possibly something larger. When you look at the top-down picture, what do you think of this in terms of charts?
Yeah, I mean, you're the guy that really understands global macro stuff and fundamentals. I'm not. I mean, I look at charts and draw funny little lines and try to make sense of it and think in terms of possibilities. And that's how I'm viewing this in terms of possibilities that obviously can modify or change or morph over time. But, I've traded markets for a living since 1974, and I've never really seen anything quite like we have had the last 2 months. This is unprecedented. I was in the market. Some people tease me that, they say, how does this compare with the Great Depression market? Because I'm one of the older guys in here. And I missed that one by 12 years. But, this is absolutely crazy. And I guess I subscribe to the theory where there's smoke, there's fire, or there's definitely something hot going on. And of course, we all know that it's tough to fade the Fed. You don't want to fight the Fed. And the fight is, the Fed's not only throwing the kitchen sink, they're throwing everything in the kitchen, including a broken toaster at this thing. And, I'm just surprised that we've seen the rally that we've seen. And so I see that the type of decline that we had, coming off the highs this year as really the possible beginning of a pretty serious decline. It's all pretty much gone to script since this market has rolled over, including this rally that we had. We got overdone on the downside. Taking the S&P back to 2180 or so was a little bit too much for the first big leg down. But you look at the volume that has come in here. In my mind, huge slugs of volume is either starting volume or stopping volume. And so we could say all of this huge slug of volume is really just demand coming in off the bottom. It's really difficult for me when I look at circumstances, possible 20, 30% unemployment in the U.S., lowest retail sales in history, still the threat of a global virus, a health virus, to think, I kind of go, hey, for the few stocks that I still own, if somebody wants to come in and pay me an all-time high price for them, they can have them. And so I'm viewing this thing, Raoul, as really the first big leg down in what could potentially be a more significant bear market. That this rally that we've had in the S&P is up into this 2,800 level. It may be all it is. Last Friday, I wrote a fairly long letter to the people who follow me for the Factor Research Service. And I explained them why last Friday I sold every last share of stock that I owned. I managed to ride through some shares all the way down, wrote them all the way back, and I explained in the letter, I'm getting out of everything. I don't want to own any stock here. And I was lucky. Last Friday, we'd taken out last Friday's low or high, but we've now sold off. So as a technician, I'm viewing the S&Ps as a possible massive head and shoulders top. We put in the left shoulder in 2018. That's where the high came in. We dropped down into that December 2018 low, which is kind of the left shoulder low. Then we rallied into the high early this year, and this big drop that we've had is the right shoulder low. And now we're rallying back toward that left shoulder high. And so somewhere between 2,800 and 2,950, I really anticipate that we're going to see a right shoulder high, roll over, and then really begin the bear move that's yet to come.
Yeah, and it's fascinating because you reached out to me on Friday and said, hey, listen, this is what I'm thinking. And I was like, or was it Friday? Whatever day you reached out, I'm like, I hadn't even really looked at that because I was so intensely looking at the chart in a different way. And I looked at it and thought, that makes total sense. It could be an even bigger top pattern than I really had in my head. And I thought, and I was also eyeing this 50% retracement, thinking, this is an area that you could possibly stop. Now, it actually has stopped around that. Maybe it does, maybe it doesn't. Maybe it goes up further. But it's really interesting to me. And I just don't think people are prepared for that kind of outcome. Now, again, as we've always said, look, the chart play out that way. But it just looks interesting, I think. I think there's a really good chance that you're right on this.
If you strip out dividends, the break that we had in 2008 in the S&Ps was down right around 54, 55%. So you apply that to the S&Ps today and say, certainly we can create just as negative global macro scenario today as we could back during the mortgage crisis. That takes the S&Ps back into the area of 1700. And so even if we have a 50% correction in the S&Ps from this year's high, all of a sudden we're looking down in the area of 1700. But if we go to 1700, we complete the head and shoulders top, and we then potentially go a lot further.
And what would be the measuring objective, that head and shoulders top, you think, roughly?
Well, I'm going to pump this out because I think to look at it, we can't really do it arithmetically. I think we have to probably look at it, Raoul, on a log chart basis. And if we look at it on a log chart basis, it can get pretty ugly. We could be looking at prices potentially down in the area of 1400 on the S&Ps.